Simplicity is about subtracting the obvious and adding the meaningful. John Maeda. That's what we do here. We concentrate on simplicity, the price percent oscillator crossing over the red signal line, particularly when it happens on the weekly chart. That's called the weekly vertical crossover. For us this year, we've had 13. 12 of them have worked beautifully. So again, please study with us every day. Sent out a whole bunch of books today. Thank you for all the orders. You don't have Charting Your Way to Wealth second edition. You need it. It gives you a breakdown of what we do on a daily basis. Helps you supercharge your training along with those daily market worksheets, trade worksheets, and weekly market worksheets that are in your show notes every day. If you're not a subscriber, go to chartingwealth.com, sign up for free. You'll get our daily reviews 4 days a week, and of course what I'm recording right now, the weekly review and forecast. Let's jump into these charts. I'll tell you in a minute about the great training we have for subscribers today. What do we see happening? The only thing that's up for the day is actually the S&P 500, and it's up 0.01%, 0.1%. Everything else is down. Nothing down big today as far as our four big charts go. But let's talk about what the week ended up looking like and where we might be going over the course of the next week. Our price percent oscillator on the weekly chart for the S&P 500 still going up quite nicely. Derivative oscillator gaining upward momentum. Hit a higher high. Bigger candle. Well, a candle higher than the prior candle. Looks like it's about the same size. We see things tracking along the weekly trend line quite nicely. So again, as far as the weekly chart goes, our big trend, things are still looking good. Today, it's flat. We can see that the price percent oscillator is moving basically sideways. Derivative oscillator still gaining some momentum. But again, as we drill into the first day of this latest 2-day candle, what do we see happening there? Well, it's not reached a higher high. And the candle is higher than the prior candle, but the wick on top shows us where the highs are. We've not done that. We can see that price is just above or just right there on the 2-day trend line. Now, we'll wait and see how this candle finishes drawing on Monday. But again, hardly up at all, but it is technically up. But again, weakening. Look at the half-day chart. We can see where things peaked. Did they? Yeah, they peaked. Well, they've hit about that same mark for about a day, popping up, day and a half. And then on Friday, we see down movement in the morning and sliding sideways in the afternoon. We see that price percent oscillator crossing over in the afternoon on Thursday and then pulling away from the red signal line throughout the day on Friday. Derivative oscillator gaining downward momentum's pierced the the half-day, I almost said 4-hour, half-day trend line. So again, things show some weakening. A lot of weakening? No, but what we're going to pay attention to over the course of this next week is what happens with this price percent oscillator on the 2-day chart. If it rotates over going down, of course, and pushes through the the trend line, forgive me, it's been a long day, a long week. The trend line for the 2-day chart, this is the blue line, then those will be 2 warning bells going off telling us to be very careful and wary of staying in. But we're still above the weekly, and the weekly is still decently strong. So pay close attention, particularly how does the price percent oscillator end on Monday when the latest 2-day candle wraps. Is it going to be below the signal line? Warning bell. It's already below the 4-hour trend line. Warning bell. If it crosses over on the price percent oscillator, warning bell. Based upon your experience, your training, your practice trading, what does that tell you to do if you see all 3 of those? Again, I'll leave that up to you. Now, let's go to the Qs. What do we see going on the Qs? Down for the day, 0.12%. So again, that's where we are. Not a big down day. As far as the week goes, the high was 274.83. The high the prior week, 274.98. So we didn't reach a higher high, close to it, but we like to see things trending up nicely, don't we? Well, we don't see that this week. We see a smaller candle about where it was in the prior week and not reaching a higher high. Price percent oscillator subsequently is still going up just a little bit, but fairly flat. Derivative oscillator losing upward momentum, still barely positive. 2-day chart, what do we see going on there? Well, we had a 2-day crossover going down. A bounce off is what we call that. It was really close and then bounced off going down. What do we see happening there? Well, we see that it started tracking down and then, of course, bounced back around and went up for the last 3 days because it's only the first day of this latest candle. Price percent oscillator, though, didn't have enough energy to cross over going up. Derivative oscillator still losing downward momentum and still negative. We go to the half-day chart and we see there, too, that it is heading down, didn't have enough energy to cross on the price percent oscillator nor the derivative oscillator. So again, we are seeing weakness in the Qs. The weekly still okay. 2-day already crossed over and just didn't have enough energy to cross back. So we'll watch. If you do get a 2-day recross, if markets surge on Monday, then by all means consider jumping into a 2-day recross going up. You can give that a try. I want you to practice that kind of stuff. Now again, when you're going to rely on 2-day recrosses, you need to research the chart of the ETF or stock that you want to trade on and make sure that those 2-day recrosses, that means when the 2-day PPO, price percent oscillator, moves back in the direction of the weekly vertical crossover, back in the direction of the weekly vertical crossover, that it's accurate 90% of the time. That means you can get into a trade when that candle closes, right as it closes at the end of the day. Remember, it's a 2-day candle, so the end of the second day. Does it give you enough movement to make a successful trade? If the answer is no, and it doesn't give you a 90% chance of winning, then the answer is no. Then you very seriously consider not doing those trades. Now again, there may be overwhelming reasons to consider doing it, but again, we want to have a 90% chance because when you follow us, like most of you do every day, you know how accurate our weekly vertical crossovers are, more than 90% this year. We've had 13 of them, 12 worked. So why would you take silly risks? It's so hard to earn money back that you lose in your practice trades, so don't lose. What do we see going on with TLT 20-year bonds down 0.39% for the day? How did we end the week? Down candle. We see, close to a bounce off. We see the price percent oscillator pulling away from the red signal line. Never crossed. Looked like it might. That week ending the 7th of August didn't happen. We have a red down candle. Does have a wick on top. We like down candles to be strong down candles because why? We like to trade in either direction. If you haven't taken our training on inverse funds, how to make money when markets crash in your practice trades, you need that. I'm going to put that at the end of today's training. Inverse funds. I'm going to stick that in there. I don't have a pen in front of me, but I'll remember it. We'll put it there. Look for it at the end of the video today. So we see a down week. Price percent oscillator heading down, derivative oscillator still positive. 2-day chart, first day of the latest 2-day. How low's the low? 163.16. What was it prior? 163.17. So close, but again, not surging down. But we do see the price percent oscillator going down and the derivative oscillator. Remember, we had that 2-day recross win on the 11th. The jumping in point somewhere around the 168 mark. What's the low that we've gotten to? We just said 163, so that's okay so far. What do we see on the half-day chart? Well, we can see where things again plumb the low on Thursday afternoon, trying to get back to that, but things still trending down nicely as far as the candles go. Price percent oscillator heading down, derivative oscillator losing downward momentum. Why? It is our leading indicator. And it basically shows acceleration or deceleration of price movement. That means that if prices are going down, are they continuing to move down at the same amount or is that accelerating or decelerating? So it shows you a slowdown in the down movement, or a slowdown in the up movement, or an increase of either one. So again, that's how we use the derivative oscillator. And really the main way we use it is to count on crossovers. We like the derivative oscillator and the price percent oscillator to cross at or about the same time. When it's at the same time, we tend to feel much better about things. So again, that's where we are. Keep your eye on the prize as we get into the week, and keep watching if you're in that down play on TLT, either in an inverse fund or a put. Practice trade. Want to know how that goes for you. Lastly, on our big charts, we go to gold. What do we see going on with gold? Well, gold, after moving up for so many weeks, and what a successful weekly vertical crossover it has been for us, jumping in point somewhere around the 166 mark to a high of what? 194. Where is it now? We closed about 186, so 186 something. So, again, still beautiful, but it did slow down this week. It's not a red down candle, but again, it's a big spinning top showing us indecision and a slowdown in the up movement. Price percent oscillators flat, derivative oscillators lost some momentum. Go to that 2-day chart. Now again, is it going to cross over? If it does, that would be another good reason for pulling your trade. Now, what other reasons have you had? Well, you've seen a breach in the 4-hour, or the half-day rather, the 2-day, and even the weekly trend lines. Now you're getting to where you're going to have a PPO crossover potentially on Monday. Pay attention to that. Maybe gold will bounce up. If it doesn't cross over, maybe it was just digesting some gains and it's getting ready to surge again. But again, you know what you can do? If you end up pulling this trade and you haven't already, with the crossovers that have already occurred, with the violations of the trend lines that have already occurred, what else could you do? Well, if you have pulled that trade already, or you pull it, then of course, what do you wait for? A recross going back up on the 2-day, if and when that occurs. Derivative oscillator gaining downward momentum. Looks like that price percent oscillator may be crossing over on Monday. It's poised to do that, but it may not. And what do we see on the half-day chart? We see a sideways slide, little down movement in the afternoon. Price percent oscillator heading down, not super strong. Derivative oscillator losing downward momentum. So maybe digesting those gains is going to pop back up. Don't know. We'll pay attention. Folks, that's where we are as we end the day. On Friday, hope that you're going to take the special training that we have for you. I said I'd tell you about that, didn't I? Well, guess what it is? It is the secret for maximizing the Monday effect. What is the Monday effect? It's also called the weekend effect. It was discovered in the 1970s. We tell you all about it in the training video. What's fascinating about it is it shows over and over again that for many, many stocks and ETFs, the market in general, what happens on Friday in the news that's released that causes the market to move in one direction or another many times carries over into the next week, possibly as that news is digested over the weekend, and that sort of becomes the zeitgeist and pushes the market in the direction that it was going in Friday afternoon, up or down. Now, if you want to help yourself and really make your trades even more likely to be successful when you're practice trading, why wouldn't you put that knowledge of the Monday effect to use? Why wouldn't you track that and see how often your favorite stocks or ETFs move in the direction? You know what we found? That Monday effect works beautifully with our weekly vertical crossovers. Why? Because we always enter a trade on a weekly vertical crossover on Friday afternoon. 12 of the 13 have worked. If you want to know more about what we do here, by all means, be with us every single day. Subscribe for free at chartingwealth.com. You'll get our daily trainings, which will help supercharge your training, plus those daily market worksheet, weekly market worksheet, and trade worksheets. And of course, follow the link in the show notes to buy our book. You can only buy it from us, just from us. And I'll send you an autographed copy just for you, wherever you are in the world. Follow that link now. Let's keep moving through these charts. I have 3 more for you. The first is Bitcoin, up for the day 1.60%. How did we end the week? Well, we got a green up candle. Did we reach a higher high? High 11,922. 11.8, yes. So we hit a higher high this week. Price percent oscillator lost a little bit of momentum, still going up. So is the derivative oscillator 2-day chart. Again, peaked back on Tuesday. And again, we just sort of see a sideways slide, a little candle forming right now. Price percent oscillator flat, derivative oscillator losing momentum. And of course, looks like we sort of hit a bottom, and over the course of this last day, maybe we're heading up. Derivative oscillator still negative, price percent oscillator still going down, but we'll see. We shall see. 2-day chart is weak for you. Again, if you jumped into that 2-day recross back on the 28th of July, you've done okay so far. Just keep your eye on the prize. You keep seeing a lot of weakening. Of course, if you're drawing your trend lines like we tell you to do, you violated the 2-day, but keep watching, keep paying attention. And again, doesn't hurt to take profit. Now, what do we see on Vanguard, Real Estate Investment Trust? What's real estate up to? Not much, 0.1% for the day. We did end up with a higher week, which is nice over the last 3 weeks. Price percent oscillators lost a little bit of energy, but still heading up. Derivative oscillators about flat on that weekly chart. 2-day chart. Price percent oscillator looks like it's a little less than flat. Derivative oscillator losing momentum. So far, first day of the latest 2-day candle is a red spinning top, means indecision tending down. And we go to the half-day chart, see down movement in the morning, a little bit of a recovery in the afternoon. Price percent oscillators going down, derivative oscillators going down. So keep your eye on things. We had that 2-day recross back on the 30th of July. And of course, it popped up. And then over these last 3 days, we've seen some down movement. So watch things, pay attention, practice trade this, which hopefully you're doing, and learn. Learn. What's going on with oil? Oil down for the day 0.23%. We did have an up week. The high 30.75. The prior week 31.02. So we didn't hit the high we had the prior week. Derivative oscillators losing a little momentum. Price percent oscillator still trying to pull away from the red signal line. That's good to see. 2-day chart, it's pretty flat on the price percent oscillator, but that derivative oscillator is heading up. Prior full candle, the one ending Thursday, was okay. This one is pretty much a doji, so we'll see how the week starts with oil and whether that 2-day candle stays as a doji or goes one way or the other. We see that we did have in the morning a crossover going down with the down movement for the day on that half-day chart, plumbing the depths in the afternoon and then pulling back. So that's where we are. Lastly, I will throw silver in for you silver bugs. Down for the day, 3.47%. Not a good day for silver, but a decent week overall, hitting a higher high during the week of 27.39, prior week 26.90. We do see that price percent oscillator losing momentum this week, as well as the derivative oscillator. 2-day chart, still a sideways slide underway. Hasn't crossed over going down, but that derivative oscillator's flipped over. And we look at the half-day chart. Again, tried to pump up on Thursday and then lost it on Friday. So for you silver bugs, continue to watch. Remember, you can take profits at any time. You've done well, done so well, even with our 2-day recross, even playing that out through the 14th, jumping in at around $18, hitting a high of 26 and still 24.58. I'd say that's pretty darn decent from around 17.50, $18. Yeah, I'd say that's pretty good in just those few days. And of course, the magic of the weekly vertical crossover would have gotten you in back at $15 in May. Gorgeous. Anyway, my friends, that's where we are. Hope your practice trades are going well. Love to hear from you. CW@chartingwealth.com. God bless. All the best from the whole team at Charting Wealth World Headquarters. By the book, subscribe at the channel.